So you can wait for confirmations and then continue the momentum down, right? Same thing with news. When news comes, price shoots up, but then it's going to retrace, right? And then it's going to continue moving up. So you're catching momentum. So you want to catch momentums, right? That's how you catch momentums. So let's see what's next. Oh, when does the momentum end, right? When does it end? The momentum ends when there's no volume left in the market, or when there's no activity happening in the market. Let's say at like 3 p.m. Eastern, after New York close, or after Asian close, there's this small time frame when there's no momentum, or between New York close and Asian open, there's no momentum. So when there's no momentum, what do? Just like right now, you open up the charts, there's no momentum. Will you place a trade? Not me, right? Will an idiot place a trade when there's no momentum? Oh yeah, yep. But as Dwight says, will you do what an idiot would do? No, you're not. You're not going to do that thing. Is it different on all time frames? Is momentum really different on all time frames? Yes and no, but most probably no. Momentum is the same on all time frames, right? But let's say if you're looking at the 5-minute time frame, so on 5-minute time frame, price is going to move maybe, let's say 10 pips, but it may retrace 6-7 pips, right? If you're looking at the 1-hour time frame, price may move 20-25 pips, but it may retrace 10-15 pips. If you're looking at the daily time frame, price may move 100 pips, but it may retrace 50-60 pips, right? So there's momentum in all time frames, but it's all relative to what time frame you're looking at, right? Because all time frames, they're going to move, well, cosmetically, they'll move the same way, but pip-wise, it's going to be different, because smaller time frames, there's going to be less pips. On bigger time frames, they're going to be much bigger pips. That's why you have swing traders, because they target bigger pips, because they can hold drawdowns if they get into drawdowns, or they can hold until the price reaches their target, right? When you're scalping smaller time frames. You're smashing 10-15 pips at a time, right? And that's all based on your goals and whatnot. But then people say, oh, market sessions and momentum, what? What does that mean? You know, like when you have market sessions, okay, and there's momentum in market sessions, how long does the momentum last? So I have the answer to that question. Let's take a look at this chart. We love seeing charts, do we? Right? We love seeing charts, right? Perfect. So let's take a look at this chart. Let's break down this chart a little bit, right? So over here you have Asian Open, right? This is 2:15 GMT. Asian Open started 15 minutes ago. So you see there's momentum, right? There's momentum. This is a 15-minute chart. So you have momentum, right? And then you have this small time frame here, this time zone where Asian is closing. And when Asian is closing or closed, there's no momentum, right? So when you're drafting a trading plan, you're probably telling to yourself that, okay, I have time to look at charts at Asian Open. So I'm going to look at chart every day from Asian Open till maybe midway Asian, because there's always going to be momentum, right? That's what you're telling yourself. And then we move into, so this is basically London Open, right? So this is London Open right over here. We have momentum, right? Price move down, price moves up, and then we have this consolidation area when it's probably lunchtime, so there's less momentum. What would signal that start momentum? Break of support and retest? Yes. So that's going to be a break of support and retest, right? So we're going to go into that. We're going to go into that detail later too, right? And then when we move into now this purple area, now if you can look at the times here, this is This is pre-New York, right over here. 215. Yeah, this is pre-New York right here, right? So we see this movement. This is momentum. We have some momentum right over here, right? And then as we move towards closer to New York Open, you have this consolidation phase, right? When New York opens, you have this momentum here. Okay, price is in momentum now. This is all New York session. We have all this movement, right? This is all momentum, right? So once price keeps going, it keeps going, right? So we're going to get into these technicals in the next slides, but for now, we're just looking at the different times of the day when there is momentum in the market, right? So let's look at the next one over here. What's this time? This is dead time. This is after New York close and before Asian Open, right? There's no momentum, consolidation, because there are no orders going through. There's no activity going happening in the back end, nothing. So there's consolidation, right? And then we have pre-Asian, right? Pre-Asian. Now, most of you guys who have been trading pre-Asian with us, right? You must have noticed that, okay, like sometimes people enter early because they've spotted a shift in momentum, right? When Asian opens right over here, 200 hours GMT, you have momentum. See, price starts to move. You have momentum. And then price starts to die off when Asian closes. So we have consolidation, right? So this is all the activity happening, all the news coming in, news events happening in the background, you know, fundamentals taking part. We have this momentum here, but then consolidation. And when London opens, we have momentum again. Price goes up, price goes down, does what it has to do. If you have momentum, pre-New York, right over here. Consolidation before New York Open, and then we have momentum again. And momentum as we get into New York, right? So let's go to the next slide here. Let's look at how, basically, now the next slide is going to be what Ted talked about on the daily, like, you know, like how the chart acts on like the daily thing. So we're going to just look at that. All right. So this is a weekly chart. This is a 1 hour time frame over the course of the week, right? So over the course of this week, you have Friday, Thursday, Wednesday, Tuesday, Monday, Friday, Thursday, Wednesday, Thursday, Monday. So Monday, Tuesday, Wednesday, Thursday, Friday, right? So here you can see, okay, the start of the week, as the day ended, there was a shift in momentum, right? Tuesday start, you know, there was less momentum right over here. And then as Tuesday started, people started to work, like, you know, you're going through all the sessions, there was momentum, right? Then came Wednesday when everyone is going full blast, right? So, okay, so then you can turn around and say, okay, maybe Wednesday is going to be a good day to trade because there's a lot of movement, right? But as Wednesday comes to a close, look what happens. Consolidation, right? This is 3 p.m. Eastern, consolidation. And then Thursday starts, we have some momentum. And then mid-Thursday, consolidation. And then as we move into New York session Thursday, there's a lot of activity because at the end of the week, Thursdays, there's normally news for USD, right? So there's a lot of momentum. And when Friday comes around, like, you know, this is the end of the week. So end of the week, everyone's closing orders, you know, everyone's starting to go home. So there's a lot of momentum. And then the momentum dies, right? Monday comes around, consolidation. Right, so maybe now you're thinking, okay, this Monday is consolidation. The previous Monday over here was also some sort of consolidation. So unless I'm a good trader, I can probably trade Mondays because there's consolidation. I can probably, like, you know, keep myself afloat. But when I look at last Tuesday, there was a lot of momentum in Tuesday. There was a lot of volume. So maybe this Tuesday will be a lot of volume too. So now you're like, okay, I'm going to trade Tuesday, right? So when Tuesday comes to a close and Wednesday comes in, you look at the last Wednesday, you're like, oh, fuck, there was a lot of volume in Wednesday. So maybe this Wednesday will be a lot of volume too. So there we go. We have a lot of volume, right? So now at the end of Wednesday, we had consolidation. What happens this Wednesday? At the end of Wednesday, we have consolidation. See how the market does the same thing? It's doing the same thing. It's not getting smarter. It's not getting harder, right? And then Thursday starts. You have some volume, right? You have volume. Because the last Thursday was also news. And then look, this is the news events and there's volume. And Friday, we have consolidation. And as the week comes to a close, we have some momentum. And we have momentum, right? And the week closes, consolidation. So this is what you are looking for, like when you're planning days to trade, right? So now I know in my mind that Wednesday, Thursday, and Tuesday are my biggest days to trade because there's a lot of volume in those days, right? So now what I'm saying is that, okay, my part-time job is maybe only on Tuesday, Wednesday, and Thursday. Oh, spoiler alert. Yes, right. So my part-time job is maybe on Tuesday, Wednesday, and Thursday because this is when there's a lot of volume. And if I can sit down on Tuesday, Wednesday, Thursday from, let's say, 6 to 9 in the evening, maybe I can catch something or see something which I didn't see before. But now when I have all this simplicity in front of me, when I have all this information, right? Maybe now it can get easier, right? Maybe I can see things clearly now. Like Mondays, there's consolidations. Maybe it's not a good time to trade, right? Friday, there's a lot of haphazard movements. Okay, maybe not a good time to trade. But Wednesday, there's a lot of volume. Thursday, there's a lot of volume. And Tuesday, right? So maybe I can do something with those 3 days. So now guess what's happened now? Now you have a part-time job, Tuesday, Wednesday, Thursday, 3 hours a day or 4 hours a day, right? Provided you're not looking at the charts at the other days, or when you're not looking at the charts when you're not supposed to look at the charts, right? So basically you're identifying the times when there's a lot of momentum in the market and you're taking advantage of that. This is what momentum looks like. I don't even know why I have this meme over here. It's just a random meme. No idea why I had it on there. I just realized it. All right, so now we're gonna get to the interesting part. We're gonna get to the EMA retests and wick fills. But before we go over there, does someone have any questions on momentum or something? So volume is technically analysis, since if it's making high, yes, exactly. So volume is basically, what I found is that when price makes a low or it makes a high, you know, with ferocious movement, it's going to retest that high or low, right? Because it was in momentum, it reached a high, and then the momentum started to die down, so it like kind of retraced, and then it's going to continue that way because price is still in momentum. No, I don't look at the volume indicator. If price is in downtrend, so the scalper, would you just sell the resistance since that's the trend, or would you buy your supports also? It depends. It depends what your trading plan is, right? Because when you're looking at the chart, you're looking to either sell or a buy. You're not looking at both. You have to realize that. You're not looking at a buy and a sell. Because if you're looking at a buy and a sell, then you're contradicting your analysis. Yeah, stick to one bias. If you're looking for a sell, you're just looking for a sell. If you don't see that sell that day, that's totally fine. Because you know what? You're following your plan. And if you didn't see what you wanted to see, that's okay. Now you're moving on to the next day. Yeah, exactly. Do you adjust the support resistance on the 15-minute time frame? Yeah, we're gonna get on to that. But yeah, like you're continually like every time you look at the charts, you're adjusting to see, okay, where can I have a prime entry? Because your entry will determine your stop loss, right? If you have a good entry, you can have a 10 pip stop loss. But if you have a bad entry, you're gonna have a 15 pip stop loss or a 20 pip stop loss, right? Rakil, do you study candles or look at the bigger picture? I look at everything. So the next section we have on EMA retests and wick fills, it's gonna go all into that. With high momentum candles, the 50% candle normally retested. I'm not sure what you mean by that. I haven't really focused on that. I'm a very visual learner, and this webinar is based all on visual learning, right? And it's all like, it's some technicals there too, but mostly it's visual. So we're going to go over that now. What candlestick types are most important? Bullish engulfing and bearish engulfing. I've seen them to work in the past couple of months, right? Okay. Can you explain exhaustion candles? Yeah. It's amazing what few line the chart and show you never looked right. Yeah. So you really gotta focus on what the chart is saying. How has weed affected your trading? It depends. How does heroin affect your professional life? You know, or how does meth affect your marriage or your job? Questions you need to ask yourself. Like, what kind of question is that, man? All right. EMA retests and wick fills. People say they don't work, but for them to work, you need to see the bigger picture. Yes, you need to see the bigger picture. In what time frame does engulfing candles work the most? Engulfing candles, they work in all time frames. It depends what trading plan you have, right? So after we're done with this webinar, I want everyone to make trading plans based on the trading plan section. Most important. All right, so let's go to the EMA retest and wick fills. All right. The question you need to ask yourself is, do you understand time frames? Do you really know what a time frame really is, except for the fact that, oh, I have a 4-hour time frame. Okay, this is a 4-hour time frame, right? But do you really know that smaller time frames will work together, will move in their own different ways to create that 4-hour time frame, right? Do you really know the true difference between all the smaller time frames, like 5-minute and 1-hour time frames that make up the bigger time frames, right? So if you have a, let's say, for example, let's say if you have a engulfing bullish candle on the 4-hour, right? Let's say this is a engulfing candle on the 4-hour, bullish engulfing, right? So if you have a bullish engulfing, you can say, oh yeah, we have a bullish engulfing candle, so this means that we're going up, right? No, what you need to do is you need to drop down in the smaller time frames, and you need to see that if the smaller time frames are trying to go down, because if they are trying to go down, then maybe the next candle will form like this. And now you have a rejection because you caught it from the smaller time frames, and now the next candle will drop down, right? So you really need to understand how smaller time frames will create a larger time frame, right? So now we have examples. All those examples are based on this fact that how smaller time frames will create the bigger time frame. Everything back to that trading plan. You don't get one use. Yeah, exactly, man. You gotta have a trading plan. You got the trading plan is like your blueprint to success. Just like when you start a business, you have a business plan, right? You don't turn around and say, okay, we're gonna sell our product for $100. No, you have a plan. How are you gonna sell it? Where are you gonna sell it? And then you determine the price in the end, right? Same with trading. You have a trading plan. What are you gonna look at? How are you gonna find it? What time are you gonna look at the chart, right? taking trades come in the end, right? So let's go to these some of these examples we have. This is all on like how small time frames build a larger time frame. Okay. All right. So check this out. We have a 1 hour time frame, right? 1 hour time frame went to resistance, and then it's at resistance right over here. And this is the 1 hour candle forming right now, right? This is what the 15-minute looks like. This is a 5-minute. This is what the 15-minute looks like. And this is what the 30-minute looks like. So just by looking, honestly, just by looking at the 1 hour time frame, where do you think it's going to go? Like when you just look at it. Okay, perfect. So I have some down. Some people said personal, privately messaged me down. Some saying up. Okay, perfect, perfect. So okay, the ones who are saying down, oh yeah, that's understandable because we've rejected resistance here. So this wick might get filled, right? This wick might get filled. But when you're looking at 5-minute, right, you have this move and now you have consolidation, right? On the 15-minute, you can see these higher highs being made, right? So now the next slide is going to show you how these smaller time frames are dictating the bigger time frame. Check this out. See, now as the 5-minute time frame just started to create these higher lows, right, you can sense on the 15-minute, okay, yeah, we're probably going to go up to test this high. So in this case, this wick will not get filled because you're looking at the smaller time frame, then you're saying, okay, we're going up. Even though this 30-minute rejected resistance, it had a wick to fill to continue down. But the smaller time frames dictated, no, we're going up. Yeah, this is the previous side. Right? So you're looking at smaller time frames. So even though the trend is up, right? You're not saying that you're going to sell resistance. You're not saying that once price comes to resistance, I'm going to sell it, because that's a counter trend trade. Get it? That's a counter trend trade, right? Now you have momentum. Look on the 5-minute. There's so much bullish momentum, and this is a retracement. We're doing a retracement here, right? So when there's bullish momentum and you have this range to fill here on the left, here on the left, here on the left, this makes no sense because this is 1 hour, right? But if you're looking at smaller time frames, you can see there's momentum. So what are you going to do? Are you going to trade the trend? I'm going to trade the trend. This was what? This was, I think this was 14 pips. Started off from 810, went to 960. Yeah, 15 pips. I'm going to trade the trend. Okay, we're going up. We're going up. Gonna hop on that train. Okay, looking at the price over here. Looking at the price over here. What pair is this? This is one of the IQ questions. Perfect. Wick fills. Okay, wick fills. Now, I'm about to show you that two very important concepts of wick fills, right? Two very important concepts. I have done wick fills for the last year, almost a year and 3 months, right? Very, very important concepts. Write this down and read this and really like grasp these two ideas, right, of wick fills. Wick fills are a continuation of a move after a retracement, okay? Wick fills are a continuation of a move. Went down, after a retracement, pull back in downtrends, pull back, and then went down to fill this wick, right? Or dips in uptrends, right? Dip, created a wick, and went up. Fill this wick. Okay? Fill this wick. Very important. This is the first part though. The second part is after this. right? So wick fills are continuation of a move after a retracement. It's a continuation, which means you're trading the trend. You're going with the trend, because when a candle is leaving a wick, this is like a breadcrumb for the next candle, right? So if the next candle forms, it's probably going to fill this wick, right? Now it depends, like which wick are you targeting? Is this 1 hour? You know, is this 4 hour? Is this 5 minute? Right? What time frame you're going to target? Yeah, we're going to go over every question you have. I already know what question you have. I already know what question you have. And we're going to go all over that. Don't worry. Don't worry. Right? So if you're targeting 5 minute, it's probably going to be 3 pips. But if you're targeting 4 hour, this is going to be maybe 15, 20 pips, 30 pips, 40 pips. Right? If you're looking at 1 hour, maybe 10, 15 pips. Right? But let's say this is a 4 hour wick. If this is a 4 hour wick, what's going to be the market structure on smaller time frames? Wouldn't it be like something like this? Have this pullback. So this pullback is candle closing right over here, correct? And then we have some movement like this, right? This top is the next candle making a wick. Some people call it a fake out. See, had a question about a fake out. We've answered fake out right over here. If you're looking at the overall picture, right, this is a wick being formed on the next candle, on a higher time frame candle, because now you're looking at the overall picture, right? But where are you entering? Maybe you're entering when this starts to go down, right? Maybe you're entering right over here when it's making a high, because now you know we're in a downtrend. We have this wick to fill, this wick right over here. And this wick to fill is this bottom the market made, right? So you enter over here and you write this wick down, and then you take a screenshot and you post it on Instagram and say, look, wick got filled. Yes, this will be uploaded in the drive. I can't repeat myself because I just can't repeat it the way I said it. I can't repeat it the way I can say it, you know? So yeah, you just have to like go back and look at it, right? Does this make sense? This just made sense to me a few months ago. Yeah, just one time only. You win a lottery once. You don't win it afterwards. That philosophy changed my trading forever. Like, you know, how to trade the trend. That's how you trade the trend. That changed my trading. Let's look at the next part. Next most important concept. During volatile session times, there is momentum. And when there's momentum, wicks get filled, right? So when there's, let's say when price is moving zigzag, you know, there's no momentum. All the wicks are getting filled, but there's no momentum. There's no pips to give. But when there's momentum, right, price is leaving these big ass wicks. Like, you know, these wicks are getting filled when there's momentum, when sessions are open, when there's news events, right? When there's news events, price is making highs, like on interest rates or NFPs, they're dropping down and coming back right up, right? If you're buying over here, you're probably getting stopped out because the faster it moves up, the faster it's going to retrace, and then it's going to continue moving, right? So you're waiting for candles to close to see how big wicks they're leaving, or you're waiting for retracements on smaller time frames. Rejection wick has no body. What? Rejection wick has no body. So what you're saying is this is a rejection wick and this is the candle with no body, right? This makes sense? Little body, no. A rejection wick is a big wick with a small body. This is what's going to be a rejection wick with a small body. Yeah, doji, whatever, right? But you're also looking at smaller time frames. That what if this is a 4-hour candle? what is the 5-minute market structure on this 4-hour candle? Or what is the 15-minute market structure on this 4-hour candle? Right? So this wick may not get filled because this is exhaustion wick. But if you have a wick like this, right, and price is in bullish momentum, then yeah, of course, this wick will get filled because we are moving up. If you're trading the trend, wicks will get filled. Simple. Rejection wick is like a candle which has long, yeah, exactly what Jeremy said. So now we're gonna keep taking notes, keep taking notes. After this section, we're gonna answer questions, right? And some questions are coming right up. Some questions are coming right up. All right. So sometimes what happens is that a trader comes to me and says, "Oh, it's 3:23 p.m. Eastern time, man. It's near close. Why isn't the wicks getting filled?" "Oh, wicks don't get filled. It's the Fugazi. Stupid wicks. How can the wicks get filled? They don't get filled all the time." But you need to ask yourself this question. Or you need to ask yourself the following questions now. Is your IQ 108? You must be a genius, right? You must be a genius. If wicks not getting filled, ask yourself these questions. Is there volume in the market? Right? Look at your trading plan. Is there volume in the market? Is this time when there's volume in the market? Right? Is this the time when there's volatility in the market? Is there? If it's 3:23 p.m. Eastern after New York close, is there volatility in the market? Probably not. If there's no volatility and there's no volume, it means there's no momentum, right? Right? There's no momentum. Oh, look, when there's